Too much time is getting wasted with things that do not matter. People look at the altcoin market, wonder, what alt should I buy over here? People look at the stock market and make so much analysis trying to find the perfect stock. People look at precious metals, people look at property and micro-analyze everything. But really, when we are honest with ourselves, we know that that decision does not matter. When there is a crypto crash, all the cryptocurrencies go down, maybe except 1 out of 100. The same is true for the stock market. When the stock market is going down, pretty much everything is going down. The same is also true for property. Let's say there is a property crash, then of course your individual house will also go down in price. So really, what matters is not what kind of micro decision should we take. What matters much more is what asset class should we mainly invest into. And the interesting thing is that very few people actually change their favorite asset class over time. There are the people that always buy into property. There are others that always just buy Bitcoin, or others that always just buy into stock ETFs. But really, we should change our opinion of what's the most favorable asset class over time. Now we are in a problematic situation here. This is the Bitcoin price relative to the money supply over time. And it's very close to an all-time high. So Bitcoin doesn't necessarily appear that cheap. Here is the S&P 500 relative to the money supply. This chart starts in 1960. And again, it doesn't necessarily look that cheap. Why do we look at this relative to the money supply? It's because the US dollar devalues over time and we want to get a realistic picture of the performance without monetary debasement. Now here is gold relative to the money supply. Again, it doesn't necessarily seem that cheap. It's not yet at the all-time high that we have seen at the end of the 1970s, but there hadn't been so many times in history where gold relative to the money supply was much more expensive than now. So if we are buying gold today, we are really betting on a major financial crisis, something that hasn't been seen that often before. Silver, it doesn't look that much better. This is silver relative to the monetary base. An argument could be made that silver actually cannot keep up with the monetary expansion. In other words, over time it becomes cheaper and cheaper to produce. It cannot really work as a long-term store of value. And yes, there is potentially some more upside. The current momentum is positive. But we've also seen crashes at similar price levels of more than 50%. It seems like the major asset classes, so crypto, stocks and precious metals, they're either already overvalued or they're getting close to overvalued. So what asset class is currently cheap? Maybe the answer is property. This is a chart that starts in 1991. It's the property house index in the US divided by the US money supply. We had our global financial crisis, then massive money printing, then COVID, and then the recovery. But overall, this chart doesn't look too bad. Relative to the money supply, houses are still 40% below their all-time high. The gross rental yields in the US are on average 6.5%. And this is very close to the monetary expansion of 6.8%. So this is how much money devalues over time. US M2 expands by 6.8%. And the yields in the US tend to rather increase, right? 1 year ago, they were at 6.1%. The problem, of course, with property is liquidity, as in transactions tend to be very, very large. It also takes quite a bit of time to buy and sell, and there are tax implications. So what about bonds then? What we see over here in green, that's the US inflation rate, and what we see in pink, that's the interest rate. So there is some correlation here. When there is more inflation, that tends to be also more return on bonds. We have seen massive inflation after the COVID bailouts, and subsequently interest rates followed. And now they're comparatively lacking, as in the official inflation rates are much lower compared to the interest rates. So now holding bonds gives real return beyond the consumer price inflation. Now let's have a look at what this means for bond prices. That's this chart over here. This is a long-term government bond ETF called TLT. And at the bottom, we've got the interest rate. When interest rates go down, then prices of bonds should go up. And that happened over here quite well. When interest rates subsequently appreciated, the prices went down. Subsequently, interest rates went down, the prices went again up. And with the interest rate increases after COVID, we have seen a crash in the long-term government bond prices. But interestingly enough, even though we recently see the interest rates coming down, we haven't yet seen a lot of appreciation of the bond prices. And one explanation for this is that the term premium is going up. So this works against us. The higher the term premium, the worse for long-term government bondholders. Now, some people say that the term premium is an expression of how solvent the US government is. But I'm not sure if that's true. Because yes, the term premium did go up while debt to GDP rose as well. But in the 1990s, debt to GDP was much lower. Yet the term premium was much higher. This doesn't make much sense. I think it's very likely that the US government will do everything to try to keep bond prices somewhat stable at the current level. Because if nobody wants to buy US bonds anymore, then the US dollar is unlikely going to stay the global reserve currency. And so maybe we will see more yield control, maybe we will see more money printing just to keep nominal prices of bonds high. What's the best way to bet on this? There is TLT, but there's also a levered version of TLT. And that's here in pink. This is TMF. It's a 3x levered instrument on TLT. So this is 3x leveraging long-term government bonds, which gives, of course, the opportunity to bet on this narrative with not too much capital. And so again, I don't think that the micro decision matters, what altcoin to buy or what stock to buy. I think the macro decision, what asset class to buy, is more important. And maybe crypto isn't that cheap anymore. Maybe stocks aren't that cheap anymore. Maybe gold isn't the perfect bet either. But I don't hear anybody talk about bonds or property. And maybe that's where the next rally is. Again, they are historically cheap. You always want to buy things that most people shy away from. For example, here, right? Gold at the beginning of the 2000s, when we were at the height of the dot-com bubble. Had you bought gold at that point, you outperformed just holding cash by almost 300%. And unfortunately, the same also works the other way around, right? If we see another stock market crash, we can see values plummet by more than 70%. I don't have a crystal ball either. I do not know what asset class will outperform, but stocks definitely do look expensive, and Bitcoin to a degree is a levered bet on stocks. There is a lot of correlation here, and gold also becomes more and more expensive. And so it's always the question, what is something that we can buy that most people don't have on their radar? Now here's a common misconception. Most people think that there's some kind of a direct connection between risk and reward. As in, if we are willing to take on more risk, we should also get more reward long term. But it's actually not true in crypto. This is the smaller altcoins and their performance in the last year. There are 2 altcoins out of those 100 alts that actually did better than Bitcoin. There is Purple Pepe and there's the Cult token. Bitcoin during the same time almost doubled. But have a look at all of those other tokens. It's to be expected that the majority loses, but is it really expected that in case you get the winner, you only outperform by 250%, or in this case, only 35%. Had you bought a somewhat diversified portfolio of those altcoins, you're pretty sure to have lost versus just buying and holding Bitcoin. And again, a diversified portfolio of those tokens is definitely more risky than Bitcoin is. So really, there is no direct connection between risk and reward. We always have to figure out what's the best risk-adjusted return in the market. Or have a look at this, the Pump.Fun ecosystem that recently starts to get some traction again. How many people actually make money with Pump.Fun? The answer is very few. 99.6% of Pump.Fun traders have not made $10,000 in profit. And I would argue that $10,000 of profit isn't even that much in crypto. It really poses the question, does it make sense to enter a game where there's a 99.6% likelihood that the game will not end up that well? There's all kinds of reasons for the long-term underperformance. There is a potential selling by insiders that simply scoop up a lot of tokens very early on and then sell as the momentum increases. There's also secret over-the-counter dealings, as in big venture capital firms that might buy up tokens for a discount and that then dump those tokens once they release, once the vesting period unlocks. That's what happened here with Mantra DAO, with the Ohm token. That went from above $8 all the way down to 21 cents, right? More on this was discovered in the interview by CoffeeZilla with the founder of MantraDAO. But most of the time, the declines in the price aren't that dramatic. They're simply just gradual underperformance because of gradual unlock. What we're seeing here is the weekly unlocks of the altcoin market. It tends to hover at around $1 billion. So if there's not at least an additional $1 billion worth of demand every single week, we tend to see underperformance of the alts. By the way, Bitcoin has a weekly mining of roughly 300 million only, and Bitcoin is much larger than the entire altcoin market. And of course, Bitcoin also gets purchased through the ETFs and through the treasury companies, which cannot be said for the majority of smaller altcoins. And so that's why Bitcoin tends to do better than most altcoins most of the time. Let's have a look at a token that will see some unlocks. For example, here, the Ape token. This is the circulating supply over time. And again, if demand doesn't grow as quickly as supply, then the price has to go down. And so this is Ape relative to the US dollar. And this, of course, then opens the question, does it potentially make sense to still make money with this? Because there are various instruments to bet on falling prices and make money with falling prices. The problem with doing that is that sometimes we do have our rallies as well, right? This is a rally of 270% in Ape. A lot of those smaller rallies have something to do with the market in general going up, because there's all of this correlation, right? When Bitcoin goes up, when Ethereum goes up, then most altcoins go up as well, and vice versa. So just betting on falling altcoins plain and simple like this is very risky as well. But there is a solution. We can bet on falling prices of ApeCoin in this example, at the same time rising prices of Ethereum. Now this chart looks much less volatile than this chart, right? There's less short-term rallies and we see more constant underperformance over time, because now we filter out a lot of the macro development. Betting on falling prices like this is much better. So we're basically flipping this chart around. We're going short Ape, we are going long Ethereum, we get this performance. And there is a levered effect. So for example, had you opened that position 2 years ago, you would have made 476% gains, while the supply of Ape tokens didn't even double during that time. So the leverage effect works in both ways. An additional dollar into the ecosystem increases the market cap by more than $1, but also every dollar that's getting pulled out of the ecosystem tends to decrease the market cap by more than $1. It works both directions. And so this here is the performance on logarithmic scale. This is the same on a linear scale. And this is the way how I personally make my money in crypto. I don't try to find the next 10x altcoin that's likely going to burn us. I simply just bet on the market structure. The market structure is that the venture capitalists and the early investors and the team, etc., all those insiders, they tend to offload tokens over time. There's constant selling pressure on many altcoins over time. Just think about this logically. What would you rather try to do? Find the 1 or 2 altcoins that are green on this screen, or just flip this entire picture around and everything that's red becomes green and everything that's green becomes red. Suddenly the odds are in our favor, right? If we bet on falling prices of altcoins relative to the rest of the market. I have followed this strategy for the last 4 years, and had I just dollar cost averaged into Bitcoin, I would have gotten the return that's shown here by this light gray line. But instead, because I also bet on falling, very poorly performing altcoins, I got the performance that's shown in the black line. So we can generate relatively consistent outperformance. Yes, there are a few months where we're just going sideways and where we don't necessarily make money, but the overall trend is very clear. And so it might seem a bit complicated, right? We're not just buying an altcoin, we are betting on rising prices and on falling prices, and we don't even just use the spot market, we're even using perpetual futures. So we use derivative contracts. It all seems a bit complex, but in the end, it's actually not that hard. I have made dedicated videos on the topic, and you can simply just watch those videos. The most important ones are over here, using perpetual futures to bet on relative valuations, and also extremely important, risk management with relative valuation bets. Once you've watched those 2 videos, which in total is just 1 hour of content, you know exactly what to do in order to get performances like this. I'm so confident in this strategy that after you have watched those videos and you've joined the community, I will send you my favorite trade. Now my favorite trade is not anymore betting on a falling ape price, because the circulating supply of ape will not go up that much anymore, relatively speaking. But I will show you my favorite trade, and if you do not make money with that favorite trade, when you've joined premium and the favorite trade didn't make you money within the first month of holding the position, then I will refund the premium membership fee to you. So just join the trade, see if you make money, and if you don't, then this $125 are never spent. I will just send this back to your credit card. There's also a way to pay for premium in crypto that's also described on the page that's over here. The minimum duration for crypto payment though is 3 months. So you might want to start out with credit card first. I am of course sharing every single trade that I make. So I'm not just sharing my favorite trade where there's the money back guarantee. I'm sharing every single trade as I make them in real time in the chat. A link to premium should pop up directly here on the screen. Just click on that. It will lead you to the website. If it's the very first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in premium. Cheers.